right, Jeff, why don't we go ahead and kick it off right now. So once again, my name is Luis Vasquez and I work at UCI Beal Applied Innovation. We want to thank everyone for joining us at our second virtual event, this one with Jeffry Weinhuff from Visionary Ventures, and we'll be talking about life science and investing for the long term. So our goal is to continue to connect Southern California entrepreneurs and the innovation ecosystem with experts and resources that will help the entrepreneurs and the founders navigate this current crisis. And hopefully we want everybody to be able to thrive as we get out of it. Our goal is to host one event a week. So keep an eye out for your emails. We've already got one lined up and the details will be forthcoming. So for today's event, as I mentioned, we're honored to have Jeffry Weinhuff. He's the managing partner of Visionary Ventures as our guest. Visionary Ventures is a venture capital firm headquartered here in Orange County. They focus on life science investments with a unique process and approach that we'll cover during Jeff's talk. As an introduction for Jeff himself, he's been active in the private equity world for about 30 years. At Jefferies & Company, he founded the Investment Banking and Capital Markets Group. He also served as the head of investment banking, was a member of the board of directors, and head of the commitment committee. Prior to Jefferies, he was with Drexel Burnham Lambert, where he founded and co-headed the buyer advisory group and served the underwriting companies. So a few details to make today's event a little bit more efficient. We have all the attendees in mute mode. And if you have a question, what we're going to ask is that you put it in the Q&A box that you'll see on your Zoom interface and type the question there, and then we'll try to get to as many of those questions as we can near the end of our presentation. And just to give everyone a heads up, this is also being recorded, and later on today we will have this posted on our website at UCI Beal Applied Innovation, which you can get to at innovation.uci.edu. And speaking of web links and such, I've already put a number of web links into the chat box, which we're referring to a little bit later. So you can grab those now, and then later on I'll try to copy those in there as well. So finally, keep an eye on your email. As I said, we'll have more details about next week's event. So with that, I'll go ahead and we'll bring ourselves up a little bit bigger here so you can see us and you can see Jeff a little bit better. And to start things off, Jeff, why don't you give us a high-level overview of Visionary Ventures, and then we'll get into its origins and strategy. And you're on mute, Jeff. There we go.
There we go.
There we go.
Okay. So thank you very much for having me today. Visionary is a life science fund based here in Orange County, focused on the field of ophthalmology and moving into medical aesthetics. So we are a lead investor, generally a round or later investor, usually the first institutional money in a deal. And we're very active in terms of working on our companies. So we are kind of the poster child for focusing on what's core in the market where you live. We live in the heartbeat of ophthalmology, and that's why we built the fund here.
Okay.
We're investing in our second fund.
You guys have a very unique strategy, and I think you almost can't talk about Visionary into your strategy for key opinion leaders and KOLs. So why don't we kind of dive into that?
Sure. So this is probably more detail than most people will want to know, but in the context of life science investments, most firms, most very large firms, are very broad. So you could see them doing oncology one day, neurology the next, maybe an occasional ophthalmology deal, although pretty rare. And so they're trying to be kind of all things to all people. In ophthalmology, we took a different approach, and Visionary decided that the most important resource in ophthalmology are the group of people called key opinion leaders. So those are actually the doctors and scientists who are involved in pressing the edge of advancement for new technology, both drugs and devices in ophthalmology. So there are 20,000 ophthalmologists. There are probably 120 key opinion leaders. And those are the doctors their colleagues look to for guidance on how to use a product, what's an appropriate way to treat a particular indication, what fits where. And so they're involved in clinical research. They're involved in speaking a lot to help industry work, and they're an immense resource. So the unique thing we did was instead of calling the occasional ophthalmologist and say, what do you think about a product? We focused the fund on finding first 25, and then in the second fund, more than 75 key opinion leader doctors who are actually investors in our fund. And what that means is that that group constitutes our deal pipeline. Every deal we've ever done has come from a key opinion leader who's on a medical or scientific advisory board. They bring it to us as a group. We peer review it with all those group of doctors, and we can work in front of the eye, back of the eye, all aspects. But it really is a very powerful tool. So that's where our deal pipeline comes from, and that's where our clinical and market assessment comes from. It's very important for us. I don't think anybody's ever done that in a venture fund before. So we're not trying to do many fields. We're just focused on ophthalmology with that group.
No, you're right. That is not a very common approach, I think, within VC firms. So when you guys got started, kind of what came first? Was it this strategy that led you guys to create the fund, or did you create the fund and then think about, well, how are we gonna do this better and differentiate ourselves?
Luis, I've been in the private equity business for actually more than 35 years, and what's happened in that business is become more and more broad, and it's very hard to find a competitive advantage. So what we were looking for is a way to have something that is better information and the ability to mitigate risk. And so the strategy very much came first. The idea was, and this was an idea that had been proposed some time ago by another group that didn't get fully executed. And the idea was find the key opinion leaders, dig in, make a fund around that, and that also benefits from the fact that Orange County is the locus of ophthalmology globally. It's a $60 billion business that basically lives here.
Mm-hmm.
80
Okay,
companies, $15 billion to the California economy.
Yeah, absolutely. No, and it's wonderful to have a fund then that can provide the capital to kind of continue that virtuous cycle. So back when, tell us, when did you guys actually get started?
Started in early 2016. The kind of origin story is that two doctors, Dr. Sadri and Dr. Tyson. Sadri's local. Ehsan Sadri is a local leading ophthalmologist, and Farrell Tyson from Florida. Saw this strategy, thought about it, decided they wanted to do it, and came to Octane to see if they could really make something out of it. And the three got together and then recruited a couple of other people and embarked. And so they raised a little bit of money and then realized that they needed professional investment help. So I happened to know Bill Carpo at Octane, and we decided to work together on this, and we dropped in and built an investment team, and that's where we came. We did one fund starting in 16, fully invested by middle of last year, and we are investing out of our second fund now. So it really works very powerfully to have those KOLs as partners.
Got it. An interesting question just came through, and it's relevant to this. So for the most part, the KOLs, are they the KOLs, you said a lot of them are investors. So are they experienced investors, or as you look across your KOLs, is this their first kind of venture investment vehicle that they're involved in?
Many have invested in the past. Some, like Dick Lindstrom, have deep investment expertise, but in general, they haven't. And or if they had, they threw $20,000 here and
Right.
hoped it turned out. So there's actually a function in the way that we do our deal pipelines, and we rely on the KOLs for finding us the best opportunities and helping us to evaluate them. We have a monthly meeting where they all get together and talk about it. And once we find something that we think is going to have real utility in a big market segment, then the investment team digs in and we explore all the rest of the aspects that are important, like intellectual property or reimbursement, market size, how we get to market, et cetera, and making sure the quality of the team is up to it. So at the end of the day, the doctors are not making investment decisions. They're making decisions on clinical utility, and the investment team makes the investment decisions.
Got it. Got it. Interesting. Okay. So, has where is Fund One kind of stand right now? Are there still any new investment opportunities available for Fund One, or at this point, is it in the kind of into the reserve where you're kind of holding reserves for follow-on investments to those companies?
Yeah, actually, Fund One is fully invested. We made 9 investments. 90% of those were successful. We had one that did fail, and I don't think it was a bad product. It was just an execution issue, and its company continues, but our interest is much diminished. So Fund One had 2 exits, one in 13 months, one in 24. And then we have optioned another company to a big strategic for a very large amount of money that will turn money back to us. So we're not continuing to invest out of that, but Fund One was about half devices and half pharma investments. And we're now investing out of Fund Two.
Okay, terrific. Another question just came through, which was relevant to this. So, based on what you've described, that it seems like most or all of your deal flow comes through your key opinion leaders. So, random entrepreneur, let's assume it's a high quality person, comes up, has an idea. Will you look at that if it's not through a KOL, or should it go through a KOL?
The best path is through a KOL.
Okay.
There is, but if you have something that we think is really promising, we'll often put you together with an interested KOL, and the teams can work together. So I think it's important to understand that, at least in our case, we're not making up companies from scratch.
Sure.
So people come to us with a real company, with real IP, with a big market opportunity, and a product that's pretty well developed. We're generally investing while companies have products in the clinic and can show human data and are progressing. So if somebody just has an idea, that's not an investable idea for us. They should work on that on their own, and then find some KOLs to refine their thinking.
And then specific visionary KOLs, or kind of any quote KOL that can then surface it to you guys?
Well, there are a little over 100 KOLs in the United States, so odds are good if you find a good one that he's going to be one of our partners.
And connected, yeah.
But anybody will work to get you started. And I think it's important not to create products just because you're excited about a product, but because it meets a large unmet need. So you could spend 10 years working on something that's a marginal improvement on the standard of care, and you wouldn't be able to get either investors or a return on it. But if you find something that's a big leap forward, like our presbyopia drops, so we have a company that will allow you to put your reading glasses down, put a drop in your eye, and using 1 or 2 drops, you'll be able to read without assistance for up to 8 hours. So things like that are a big deal. There are 100 million people in the US, at 2 billion worldwide, who would like to see a better thing than reading glasses. That's a big leap. And everything else is oriented around that kind of a concept. Let's find something where it's a big improvement, and we can help people a lot.
Great, great. The audience actually continues to grow, so just going to give a little quick kind of come back from commercial type of thing. So my name's Luis Vasquez, and the other person you see on the screen right now is Jeffry Weinhuff from Visionary Ventures. And Jeff has been describing the origins of Visionary Ventures and their strategy of using KOLs to both bring them deal flow and to make strong investment decisions that are backed up by their clinical and real world experience. As we move on a little bit, what we're going to be talking about as well is kind of what Jeff's doing now for the future. And we're definitely going to spend some time talking about kind of what's going on right now and how life science entrepreneurs and life science investors need to look at the current crisis to move it forward. So that's what we'll be talking on as we continue to go. So maybe kind of as we transition out of Fund One, I think a good question is, what did you learn out of Fund One that you're now applying for? Every everything sounds good on paper, and the best laid plans often adjust. So what are some of the lessons from Fund 1 that you're taking now into Fund 2?
So I guess there were several. The most important lesson is one that most private investors know well, is that the team is the most important thing. An A team with a B product is better than the reverse. And so it's critical that you have, people that are thoughtful, high integrity, deeply skilled in what you do. This is not a game for just casual exercise. This is real stuff. So team is the most important aspect. I think we all, and I've known that because I've been investing in private markets for 35 years. But I think one thing that made me a lot more comfortable, having not been a life science investor before, was that the FDA is much more predictable than you think. So we live in kind of a walled garden where, between regulatory and reimbursement, if you just wander in here and spread money around, you're going to lose a bunch of money. But if you work with the right people, then the FDA is far more predictable and constructive than you would think. And also that the reimbursement markets work the same way. Now, nobody really wants to pay more money, but if they see value, they're willing to pay for it. So I think if we, again, focus on a big unmet need with the right team, what we are able to do is make investing in life science investments much more predictable than it would be elsewhere. And I think that helps a lot.
Oh, terrific. All right. So for Fund 2, kind of a new focus area, a new set, sounds like a lot larger set of key opinion leaders. So what's the, and I'm sorry if you mentioned this earlier, when did you have your first close on Fund 2?
First close on Fund 2 was in June of last year.
Okay.
And
we're sorry, I kind of catch myself sometimes. So a little bit of inside VC here. What a first close essentially means for those folks that are listening is when you raise a new fund and you actually have a first close. That means when you get firm commitments from your first set of investors, and then generally speaking, you can start making investments out of that fund. So when Jeff says they had to first close last year, they were able to raise a certain amount of money, probably have some more going in, and are now then investing off of that. So anyway, sorry to interrupt you, Jeff, but wanted to catch myself on the lingo there. So you had your first close last year, started to make some investments?
Yeah, so we have made 4 investments out of Fund 2. 2 were existing portfolio companies, the others were new assets. And we see very high quality deal flow, and if we kind of work it through our process of helping with people, we're in good shape. And I think our focus will be, so when you have considerably more money in Fund 2 than we had in Fund 1, then, it's like, how are you going to do your strategy? What's different? And we're really doing mostly the same thing. So Fund 1 was 9 companies. Fund 2 will probably be, round numbers, a dozen. But because we're a lead investor and we're very active in the management of our companies, we can't go spread the money around 30 investments and hope they turn out like some of the seed investors do. So since we're a round in later and we're deeply involved, what we're basically doing is putting more money into roughly the same number of companies. And that concept was proved in Fund 1 because we did 9 investments and the companies consumed well over $100 million of capital over our investment period. But we were unable to put all that money in, so we just put a portion in. Now we're simply continuing to lead and putting more money in. Same strategy. The other difference that we're doing is that continuing in ophthalmology, we'd like to open a window into medical aesthetics. And that is a market that is very similar to ophthalmology. It too is headquartered here in Southern California. KOLs are important. There are lots of deals. There have been 20 odd billion dollars of deals done there in the last few years. And, the big strategics are paying for innovation. That's just like ophthalmology, although a less mature market than ophthalmology. So the great opportunity there.
Yeah, is the reimbursement outlook is somewhat different. I mean, there's certainly private pay in ophthalmology, but probably, more private pay in aesthetics, I'd imagine, right?
You're exactly right, Luis. And, aesthetics is all private pay.
Okay.
And our ophthalmology portfolio is about 50% private pay and
Hmm.
50% reimbursed. So, our dry eye products are not reimbursed, and, our presbyopia drops are not reimbursed, and some of the cataract lenses are not reimbursed. So it's about 50-50 for us. And if you do the right market research, you can find out the important part is what the payers are willing to pay for, or what the consumer is willing to pay for, and that too is a knowable thing. It makes it more predictable if you do good research.
Hmm. Okay, let's talk a little bit about what it's like to be a VC here in Southern California. So, is this other than this being a headquarters of the companies that you're targeting, that's obviously a benefit. But what are some of the other kind of larger issues about being a VC in Southern California?
This is a complicated question. So it's something people are putting a lot of energy into trying to figure out right now. I think it's important to understand that there's a robust process of innovation taking place in Southern California now. There's about $6 billion of venture capital investment done every year in the last few years. The challenge is that there is almost no local venture capital. So 95% of that money is coming from somewhere else. And if you think about the opportunity set here, there's great tech investment, there's great life science, there's a good talent pool, we have great engineering universities, and there is but there is very little organized venture capital ecosystem. So that requires effort. For us, it gets us, kind of better pricing and better ability to focus on things that are local. We actually invest around the globe, but then since all the resources in our industry here, 80% of our companies either have an office or operations or use significant resources here. So when you look at innovation in Southern California, it's an important thing, but we're way undergunned on the amount of venture capital money. It's only 5% of the annual need.
Right, right. So how do you address that? How do you address that capital shortfall, and how can you find more support for those companies?
So you kind of have to build a robust environment that works, and an innovation economy, for want of a better term. And there are regions who have done that very successfully. If you have a commitment to innovation, you can actually spool these things up very quickly. New York, for instance, had virtually no venture capital funds 10 years ago.
Mhm.
Now they have billions of dollars of assets investing in venture, mostly in fintech, because that's their area of concentration there. And they have great success, robust ecosystem, and all that stuff. So you can make a real market impact. And so why do you want to do that, and why is that a benefit, and how does that turn into capital? So the reason it's good for us is Southern California is somewhere in the upper 50% of innovation economies. If you look around the globe, obviously Silicon Valley is number one, and Austin, New York are also there. But but there's real virtue in having innovation compared to regular jobs. So for every tech
Mhm.
job that comes on, you get that one tech job plus 5 additional jobs, 3 service jobs and 2 professional jobs. So that's a big deal. And if we're looking in an environment where innovation is an important thing, which is paid highly, you help people beyond just the people who are innovating directly. So you might find yourself with service workers and the rest of those people to do that. So this is a good place to do it, because we do have a lot of smart people here, and we do have areas of concentration in tech and life science and cyber and things like that. And you really need to focus on the areas of strength there. But if you do, I think you can make a very successful ecosystem that will reward capital. So there are people who are very involved in trying to do that, and we can talk a little bit about that. But that's really kind of what we need to do. We need to focus new capital efforts on areas of strength in Southern California and build funds around those. And I think that really is a great opportunity.
Right, right. In fact, yeah, you and I had discussed this before. And so I think most folks can see that we've listed here some organizations that Jeff wanted to bring up here. So Jeff, wanted to you talk kind of how you engage with these various groups.
Well, there's no particular, there is an order of these people, and it's not in terms of how much I like them, it's actually in terms of stage of development. So applied innovation at the Cove is really early stage, very thoughtful, integrated with the university, passing knowledge around and trying to help people start early. And that's an important aspect of what we do. Octane has been here for a long time and is very involved in connectivity, conferences in tech and life science. And, they put on great conferences. They also provide a lot of content for the environment. And they have as part of Octane Launchpad, which is an accelerator, so it's later stage than the very early ones, with a great track record. And that's all that is kind of connected to the Small Business Development Association. So it depends on what you need in order to find the resources, but you should look at all these places. The final one is the CEO Leadership Alliance, which we call CLA, which is a more recent thing put together locally by the chief executives of the larger companies, recognizing the need for innovation. And so, many people have participated in that. What CLA has done is they have a number of work streams that you can learn about from their websites. But the important thing from the capital perspective is they are building what's called a master fund, which is investing in other funds, and the local corporate community has been very active in supporting that. So people like Edwards Life Science, Pacific Life, Western Digital, Golden State Foods, many, many more are active in actually putting money into venture activities in local venture funds. We have the benefit of having them invest in us and in Miramar, another local tech firm. So, people are not just wringing their hands about whether or not we can build an innovation economy that is deeper. They're actually spending time and money on doing so. So these are all great organizations. It's a process that's evolving. We have great starting point, but there's much more to do.
Right, and listen, and I'll point out that that we're there's a lot of efforts going on, kind of both spearheaded by the CEO Leadership Alliance and a group that they're putting together, an innovation group, and we are creating. This is going to be led by Kerry Ransom, but I'm helping him as are a number of other folks, maybe 30 or 40 of us, and we're building a roadmap of sorts that will take a lot of these different organizations and support systems and try to lay them out in such a way that an entrepreneur can understand where they are, where they fit, and kind of what can go in each direction. So that's something we hope to roll out here pretty soon. Didn't want to jump the gun with the drafts that we have, but literally Kerry and I have been exchanging emails on this week to get that moving forward, and we're excited about that. So
that can be very helpful. Seed stage people very early, just at inception, need different resources and thought process than people who have built a team and have a product and the rest of that stuff. So there are swim lanes here, and there are people who are early and people who are in the middle and people who are late. And,
right.
And knowing how the roadmap works is very helpful.
Yeah, and why don't we talk just about kind of advice that you have for medical device entrepreneurs in general, because you've given this some thought. So you're not only are you guys kind of thought leaders on the product with the KOL side, but you yourself have also given quite a bit of thought to kind of what medical device entrepreneurs need to think about in their frame of mind, right?
Sure. So this actually underpins our investment thesis. So if you don't have a uniform theory of how the world should work, or at least how your piece of the world should work, it's hard to be effective as an investor. So, I kept getting questions from mostly doctor inventors and people who are interested in medical technologies, like, how do you do this? What do we think about? What's important? How do you do that? And so I actually wrote an article for Ophthalmology Management magazine last year, might have been the year before. And the link for that article is on the left-hand side, so you don't have to take notes on what we're talking about right now. You can just read it there. But kind of if you think about what's important in innovation, whether it's particularly for devices, it's like, let's not invent something that's marginal and only serves a small market. You'll put blood, sweat, and tears into this. It's a huge amount of work. Do something where when it works, there's a big payoff and you get people excited enough to put money with you to progress your idea. That's the first thing. So look at a big unmet need. That's the first important thing. The second is, think about how to get the right team. And, your team doesn't need commercial people early, but it does need product design experts, people who can help you actually make it. And very importantly, you need to have good IP. So you will not find a venture person anywhere in the world who will make $1 of investment in anything that doesn't have protectable IP. So there are great firms locally that help us with that. K&L Gates does a lot of work for us. Stradling does work. Kenobi does work. There are sensational people that, but if you don't start with IP and you can't protect it, you can't get paid for your company and you can't get paid for the idea. So the next thing is that, if you're the guy with one product and you're going to go sell it yourself and take it public, that's a really hard process. So there are people, the big strategics in ophthalmology, the big strategics, and by strategics, I'm talking about Allergan, Alcon, Bausch, J&J, Zeiss. These are people who have huge organizations focused on your market. So listen to them. Find somebody there in the BD side, the business development side, that is, who will tell you what markets are important to them and what not. Read about them. And then think about where there are gaps in the market and where you might be able to fill a need. Get feedback from those people. Don't invent something without feedback. I talk to those people all the time about new ideas, new products, things we might invest in. Super important to have that. Don't invest in something where nobody cares. Finally, the clinical and regulatory pathways are the barriers to enter our world that are very, very important and are somewhat torturous. So, there are people who do clinical work. One of the absolute best ones in ophthalmology here in Orange County is ClinReg, who is based here in Laguna Beach. And, they've approved more products than you can shake a stick at, and they know the FDA well. So if you want to come to them and say, this is my idea, what's the regulatory pathway? How do I make this done? And how can I do it quickly? If there are two different branches in the fork, think about that. So the last piece is just making sure you can get paid for it. If it's a cash pay market, understand what consumers are willing to pay. If it's reimbursement, figure out how to get a reimbursement study done. Plenty of people will do that for you. But in general, those are the big categories. It's all written down in the article, but don't give up. There really is an opportunity for innovation. Many of the companies that we finance now started as, an engineering idea or a product idea from somebody who just said, nobody's doing this and it's a huge market and I want to do it. And then, we'll give you feedback. If you've got something that's an idea, then we'll tell you where there are shortfalls. Look at other venture people that do that kind of same thing. But, if you want to do a life science thing, find a life science venture guy who focuses on your field. That's the advice.
Great. No, that's great. And for everyone that's here on the webinar, all of these links are also in the chat. So if you go to the chat, you'll see the links for the organizations that Jeff talked about. And there's also a direct link in there that you can copy and paste into your browser so you can get this article to fully come up. So it'll be there so we can just kind of go back to our regular view here. All right, let's you're sitting at home, I'm sitting at home. There's a reason we're doing that, right? So we've got to talk about, as I saw earlier, we got to talk about the virus in the room, or hopefully not in the room. So let's talk about the current situation right now with the pandemic, and how is that changing Visionary Ventures kind of strategy, your outlook, and frankly, your operations? What's going on there?
Sure. So we're mostly a clinical stage investor, so that means that we're not actually out selling product to people. We have only one company that's actively selling product to doctors now, and um, and they're shut down. So all elective surgery is shut down right now, and people think of almost all eye surgery as elective, so that's not happening right now.
Mhm.
But we're actually among the least impacted of the investors out there right now because our companies are continuing on their pathways. So if you think about what we do all those things about regulatory and reimbursement, but then, where the rubber meets the road is you have to do a clinical trial. So we have a couple companies where clinical trials were scheduled and they will now be delayed, but you can do all
Okay.
the work up to when you would launch. And so now we'll be pushed back by 2 to 4 months. I don't think that's going to be a big deal. What we did first was make sure our companies were safe. And every investor does this, I'm sure, but you work. So I've got 11 portfolio companies. Every single one of them, it was, how much money do you have? How long can we go with that? What action should we take to extend it? And then where are we in our timing and process? And do we have things that are important that aren't there? For us, which is not everybody in venture, but for our stage of development, we don't really have issues there. So um, we are continuing with our portfolio companies at basically the same pace they were before. We haven't laid anybody off. They're continuing doing what they're doing. And we're still making new investments.
Yeah, I mean, you literally have made investments during this work at home time, right?
Well, it's not the easiest time in the world to issue a capital call because everybody's a little nervous. But yeah, we have. We actually
Wow.
made 2 new investments that will close this month. Those are fully funded. So, we're proceeding. One is a new drug delivery system that's really cool, and the other is a pharma investment in something that was an existing portfolio company. So our focus now is, our focus is always on A quality assets. And if we can get a little bit better deal now because some people aren't investing at this point, great. But I'm more interested in asset quality than I am in the best possible price.
Ah, yeah, interesting. Well said. Because from my perspective, kind of with my network of VCs, and I'm certainly continuing to reach out to VCs to try to broker the introductions, which is what I do at Beal Applied Innovation. Um, I've probably run into about half a dozen that have said, thanks, Luis, but for now we're pausing what we're doing. And I just got a little notice. Hopefully you guys heard that. Did you hear that, Jeff?
No.
Oh, did you hear what I said?
Oh, yes, I did hear that.
Oh, okay, good. Yeah. So I thought my Wi-Fi got flaky, so I apologize for that. So essentially maybe half a dozen saying we're going to pause until maybe the end of April, the end of May. Check back into us. Yesterday, a hospital system, a pretty famous hospital system that does essentially corporate VC. They look at innovation from within their hospital system, but they also invest into ideas that can save their hospital system or can provide better clinical outcomes for their hospital system. The reply I got back from them yesterday was, no, our hospital is bleeding money right now, and so that we're stopping all of that. So I hear what you're saying about you're still going to focus on high quality assets, but I do suspect that this is going to be somewhat of a competitive advantage for you. You have a process in place. You've got capital to deploy, and there are fewer big dogs and small dogs out there eating right now. So it
You
is
know,
an investor's market, I think, right now.
I think it's an investor's market too,
Yeah.
whether it's perception or not. If you look at late stage venture in the life science market after 2008, it kind of continued to track right along. Now, not
Mm.
everybody played, and right now not everybody's playing. But for instance, right now, and I think it's very important that we're not trying to finance a commercial stage business right now. So the hospital is a great example of people who are bleeding from every limb, and they don't even want to hear about this.
Right.
But since our process continues quietly in the background and we don't have to worry about those operations, it's a big deal. We are working on subsequent rounds with other investors now, and we have half a dozen that we're close to who are proceeding as we are. So they're firms that are well capitalized, dry powder, understand the market, understand the delays. So I think it's going to be all over the map. It just depends on where you are.
Right, right. Yeah, I agree. Hey, let's talk about post-COVID-19 world. Okay, so we've got a few, three different ways we can go here, and a very interesting question that was just posed there. But I'm going to hold off on that one. So, um, let's talk about positive things. So, what do you see that is going to be positive in the healthcare system, kind of post-COVID?
That's, that's a hard one. And I think maybe the best thing I could say is awareness. Every couple of years there's something, maybe not on this scale, but meaningful. And I don't think that, globally we've done a very good job of preparation, and that's why people will die. So I think people have a natural tendency to freak out when it's like this and then go back to normal. 6 months later, they're asleep again. But this has been a pretty big wake up call. I think
Right.
that's important. I think we may see some more um, awareness around fast tracking drugs or diagnostics that will allow us to respond more rapidly to things like this. But and I think that's basically the way it has to go, because
Yeah.
this is not the only episode. This is going to keep coming.
Right. How about, sadly, the other side of the coin? So you see kind of negative long-term repercussions for the U.S. healthcare market and U.S. healthcare payers?
Not really. The demographics of American society is that the number of people over 60 are going to double in 15 years. So there are going to be a lot of people needing healthcare, and they got to get it. Now, how they get that paid for is something that seems to be an annual debate in America, and that hasn't been resolved. But it's not going away, and we're not going to tell people they can't get healthcare. So I think that's okay.
Okay.
I, I'm not terribly worried about that.
Okay. All right. I'm gonna go ahead and grab this question out of the Q&A box here. Very interesting. So, because I have seen this, I don't know if you have. Have you seen the patent pledge that's circulating that wants to make COVID-19 related IP free to use? Have you seen that?
I have not, but you know, if anybody wants to put their patents in, that's great. I don't think it should be a
Yeah.
requirement.
Yeah, so it's the question is actually how might this impact the future ability to raise money around IP in non-COVID related things. So if will the world get a taste of free IP as it relates to health technology and insist that that's the case?
Sounds
I
like
don't
free
think so.
streaming music.
Yeah,
I
sadly.
actually have this conversation with some of my doctors, and the ones who are most concerned about things like this are the retina doctors, because the back of the eye to fix those diseases is extremely complicated. It costs hundreds of millions of dollars to do the primary clinical research to figure out if you can build a product. If you can't have IP, nobody will ever invest in that. And that's just the way it is. There is one drug that could have meaningful impact in retina that doesn't have any IP protection, and it's been banging around for 3 years from a leading university, and nobody will put a nickel into it. So, as we've seen elsewhere, free anything is dangerous to people who actually have to
Mhm.
put money up. So if people and policymakers do move in that direction, capital will flee,
Yeah, yeah.
innovation will cease.
Yeah, and there's certainly even there's a risk to some of this quote free IP because you could take them at their word that it's free, but a year from now, what if it's not? Is there anything that's going to say that there can't be an infringement lawsuit that comes around and said, oh, that in fact, this was IP? So yeah, very challenging issue. So Jeff, it's been great. It's 45 minutes in. It seems like it's only been about 15 or 20, at least on this side. So anything else you'd like to add that we haven't covered?
No, Luis, I think I moved here from New York in 2000, and I'd lived here in the late 70s, moved away, and then moved back after that for personal reasons. And, there's so much more going on in Orange County now than there was in the late 70s. And innovation's happening. There are big companies who are doing first line things in medicine like Edwards. And there's just much opportunity, but it requires a response. I know I'm preaching about this, but it really requires a responsible commitment to building all the essential elements of making your community thrive. Because if we can't get innovation rocking here, then we'll be a backwater, and we'll be let's to do leisure travel and that kind of thing, backwater, and that's not going to be good. We'll lose our young people because they'll go somewhere else for jobs, and that's what's happening now. So I'm personally committed to that. I think all the organizations we put on to the thing earlier are important. It's a great place to do business, and it's a great place to be an investor because there's better pricing than you have elsewhere in high quality assets. So, if you're a local source of money, people are always more comfortable with you because we can work together. And it's hard to do that from Boston or even Silicon Valley.
Yeah. Well, yeah, I mean, absolutely preaching to the choir. I think if all the panelists could, or if all the attendees could give an amen, they certainly would. So, but I think that's a good place to kind of start wrapping it up. So, Jeff, listen, thank you so much for taking your time, sharing your expertise. There were some valuable insights, and I think the attendees really got something meaningful out of this, in my view. So, and to all the attendees, thank you for taking this time during the lunchtime. The recording of this will be posted on the Cove, the UCI Beal Applied Innovation website. We've got a tab under our events tab for these recorded webinars. You can also see last week's. And our next event is next Friday, April 17th at noon. And it's going to be some advice from a very experienced angel investor on kind of twofold: what he's been telling his fellow angels they need to do right now in terms of investments, and what the portfolio company should be doing. So it's going to be a real kind of what to do during this crisis. So we're very much looking forward to that, and watch your emails. So when we'll send out the full details on the speaker and the registration links. So with that, I think we'll wrap it up. Thank you so much, everyone out there. Stay healthy. Keep doing those things that I think have put Orange County and California in a relatively good place right now. So please keep doing those, and everybody be safe out there. So thanks so much, Jeff.
Thanks, Luis.
All right.
Thanks, everybody, for joining.